Good morning, everyone. I hope you are having a good morning. So today I'm doing this video to show you how to backtest using Python. Backtest simple strategies. Today we're gonna backtest a simple indicator, and yeah, it's just to show you the efficiency and the benefits of using coding to backtest your ideas. So, for example, if you wanted to backtest the RSI on Bitcoin, you would have to go through a bunch of charting. Like, let's say you want to buy above 70. I know it's the opposite of what it's done, but stick with me. And you want to sell below 30. So you would have to do this analysis, put it in an Excel or in a sheet, and do this for quite some time until you get to the end of the chart, right? And also you would incur in you'd be exposed to a lot of mistakes, a lot of biases. So it's not the most efficient way when backtesting for a larger scale. It is not. It is better than nothing. Obviously, it's way better to backtest by hand or than not backtesting at all. But I'm going to show you a more efficient way. So I use Python. I use the Spider IDE. When you look at backtests using when you look at coding tutorials using Python, normally they use the Jupyter Notebook IDE and other IDEs. I like the Spider one because I can have all the variables here on my right, and it's just much simpler. I got used to it. Okay, so the first thing we want to do is I've already inputted here the code so that I don't have to be doing it while we are talking. It would consume a lot of your time. This is just to show you the possibilities of what you can do with Python. So we import the libraries. There's a lot of tutorials on YouTube around the libraries. You have pandas, you have NumPy. Then we import the CoinGecko API library. We also get this library called the TA, the technical analysis. This is just so we don't have to code indicators from scratch. We can use already from a library, and that is very useful. So we get the TA momentum and we import the RSI indicator, and you get matplotlib to plot our charts. The first thing we do is we connect to the CoinGecko API. We get this. So let me show you here. If we connect to the API, then we get markets. Markets, we get a list of dictionaries. This list of dictionaries is all the coins that we have chosen. All the coins. How many coins did we get? Yes, we get all the coins that are available. So we get Bitcoin, for example, and you get on this dictionary all the data around Bitcoin. For example, all-time high, how much from the high it has changed, how much from the low, market cap change. You have a bunch of data here, data points that you get from CoinGecko into here. Then we clean the data and we put it in a more readable format. I'm going to show you. We put it like this. So these lines of code here are cleaning the data using pandas as the structure for that data. So now we get the ID, we get the symbol of the coin, and we get the market cap. As you can see, we have a lot of coins here that we don't want. We have Tether, for example. We don't want Tether because it's a stable coin. USDC neither. BUSD. We don't want those coins to make our backtest here. So we just drop them from our list and we get the top 50 of them. So we have the top 50 market cap coins here. Okay. Now we'll get historical data for Bitcoin. We use this function here, the CG get coins market cap market chart by ID. We get Bitcoin versus USD, so BTC USD. We get 1,000 days of data and we get interval daily. We get daily data for interval. Okay. If you go check what the data looks like. The data looks like this. It comes again in a list, this time not of dictionaries, but a list of lists. And then in those lists you have numbers. For example, let me show you. For prices, you have the date as timestamp. This is timestamp, and then we have the float that is a number, and you have here the price for this date. So we have to clean it up. We use this line of code that I've built to clean it. We concatenate into one data frame into df, and we get here all the data cleaned up. We get data since 2019 because we asked for 1000 days of data, and we get the symbol, we get the prices, we get the market cap, and we get the volume, all cleaned up. Then we go to the analysis part, and the analysis is a bit more complex, but we'll go through it. So in these two lines of code, we get the RSI. We get an RSI using the module above that I've mentioned from the TA package, and we define the closing price. The closing price is our DF prices. So it is this column here, prices, that is used as the close, because it is a close. And we use the length of the window for the RSI, the 14 length. And we get the RSI 14, the column, we add this column, the RSI, using this calculation, okay? And you get it. You go to the data frame, and you get here the RSI, right? For every day, we get the RSI. Now, we want to get our entries when the RSI, when the first time the RSI is above 70, and to know that, we have to get the RSI when it is above 70 and the previous candle was below 70. So let me exemplify this here. We want to get, for example, here, when it was 7 on the 28th of July, we want to get, so this candle before on the 27th was 69, so below, and crosses the first time above 70, and we get an entry. Okay, we want to get the first time. So when it is 70 and the previous candle, use the dot shift one, was below 70, and we get an entry. The exit is when the RSI is below 30 and the previous candle was above 30, and we get a -1, signaling that we get an exit. Our entry price will define in this column. Our entry price will be our close, and our exit price will be again our close when the entry is equal 1 and when the entry dot shift 1 was not an entry. So this is basically saying where did we get in and where did we get out. Then we use these functions here that is to help calculating. We use the position open. I'm gonna show you. This is just a helper to help us calculate where did you get in and out. So for example, okay, we get here our first entry on this date. You can see that we get an entry, a 1, and it exits in the next bar that offers an exit signal, a -1. So here, and you don't have anymore a position open. So that calculates. Then we get the first entry column, so that it fills the entry price that we got in. Let me show you. This will be more. So this is okay. So we get in here. We get in on 8,800. It tells us where we got in, and it fills forward until the position is closed. This is just another helper column, so we can calculate the returns. So the returns are calculated every time there is a position open. We calculate from the previous close to today's close how much returns we got. So let me show you again. So we start calculating here the returns. You get the position open, so you calculate the returns from previous close. So today's open, since there is no pre-market or post-market, we can use the previous day close, and to today's close we get a return until the position is closed. Then we use some data here to calculate it. So for example, we put into statistics df all our entries and exits. So for the past 1,000 bars, we get these entries and these exits. For example, we got in on, let's get the closest, on the 29th of July 2021. So we got in here. That is true. The previous bar was 70. So we got in on the next day bar, and we get out on the 8th of January 2022. So here. So this one was 29 and the next bar was 30. So we get out here. We get in July, and we got out on January 2022. Okay, and now we plot the results here. We can see, this is very simple. We can make it more prettier, but you can see here on where my mouse is, you can see that we had a 66% win rate, 200% average gain, and 41% average loss, with a 5-to-1 win to loss ratio and a maximum drawdown of 50%. It is a lot. It is not using any, how can I say it, any risk management tools. And now I have also put in here for us to see a plot of the chart with all our entries and our exits for the past 1,000 days. So you get an entry here, you exit, you get one here, you cover the entire run, you get one here, you get out, and you got one again here, and you are currently in a drawdown. Okay, so now I know that I went through this very fast, and it seems that it is a lot, but once you start working with it, it's not that scary, you know. I also had to start learning this. I'm not a coder. I work as an accountant. I don't work as coding. I'm not a developer. So if I could learn, you can also. And then we have here several plots. We have the plots here of the open volatility. So this shows you all the volatility when you have an open trade. This is just from a trade-to-trade basis. And this is from, for example, you open a trade and you can see the highs and the lows of the open volatility of that trade, okay? I like to see both charts. For example, now the advantage is, now what is the advantage of coding? Why don't you just do this in an Excel? Simple. You can now click here, put 3,000 days. You can put how many days you want. Here, you get the backtest, like that. Quick. You understand that buying the RSI when it is overbought and selling when it is oversold, it is profitable in itself. It can be improved, but it is profitable. It should be improved, but this basis is profitable. We have a win rate of 53% with an average gain of 115%. A 5-to-1 ratio, a max drawdown of 73%, which is bad, but it is profitable. And for example, now we want Ethereum. Let's test Ethereum. Wait, sorry. Okay. Oh, no. Ethereum. Here you have a ETH. Here you have the backtest for Ethereum. You want Solana? Let's go Solana. Here you have it. You want, for example, let me check BNB, for example. Oh, Binance. We have to know what the market is called. Markets. It's the variable called markets, and we have Binance Coin. It's called Binance Coin on CoinGecko. So use Binance Coin, and you get here a backtest for Binance Coin. Yeah, it had a big gain here, but you can see that it covers the trends more or less. It's not very good, but it is so simple. It's just buying the RSI when it is above 70 and is selling when it is below 30. And you can run this simulation for anything, on any asset, on any time frame, anywhere. You see? Imagine how long would it take to you to run such a simulation by hand? Probably weeks, months going through charts by hand, you know. And with coding, coding makes it way more efficient, and you can work with things with ideas that are way more complex than this, and yeah, build a trading system that way. This is the advantage of coding your ideas. Now, I didn't went through this with very detail, every line teaching Python, because I don't think that you want to see what I don't think you want to see me teaching you Python. There's a lot of incredible developers on YouTube that show that, and I believe they would make a way better job than me. But my plan is to show you several indicators, maybe once a week, test a system, test a strategy using Barbicator Pro as well, and show you what is possible doing this type of backtests on your own, using coding, using Python to help you with this. Now, for example, you have the RSI. Next week, we're going to test maybe an SMA or multiple SMAs. Let's make it our goal to 1 week. I'll test a bunch of indicators with you. Please send me also what you want to see tested, and I'll test it here on video. Feel free to send me your messages. Okay? Thank you very much. I hope you enjoyed it.